Hello friends, welcome to my channel and thanks for watching this video. Friends, as we have ended with one more worst week, I can't say bad but worst week, which has ended with a flat note, and the overall market is now feeling the pain or extreme pain and uncertainty that has caused because of monetary as well as from the government itself, and that causes a huge reaction from the stock market that we have seen in the last couple of days. And if you are going to check my previous video on US weekly market report, I have said and explained the same thing, that this market is not going to hold on very comfortably, and that's what has happened. Once the big event was over, market thing, yes, market has already factored in, but the question is then what? Okay, now when the things or the talks started moving in the market about some very bad thing or about a scenario of recession, then market has reacted, and it has reacted quite badly. So with the very bad note, let us just start analyzing what has happened in the last 1 week and what will probably happen as far as the next week for Wall Street is concerned. So welcome to another session of USA weekly market report, where we are going to analyze the next move by the market or next move in the Wall Street. But first, let us check out some new or important news that's making the headlines. Okay, so let us just scroll down some of the news and let us see what do we have here. So some, I've been going through some of the investors or money managers or fund managers for the last 3 or 4 days quite vigorously, and there are some very mixed reactions that I can see as far as the investors are concerned, because some are very bullish and some are indeed very bearish, and some want to hold on and judge the particular scenario. And now I think this press release, Ukraine moves closer to joining the EU. And if you're looking at this headline, this nothing talks or looks like, I mean, anybody is in a hurry to end the geopolitical crisis, which makes the commodity soaring like anything across the globe, and that has a very big impact on the overall population, and not a population of a particular country but the world's population. So these things are not at all good. Apart from that, Fed promises unconditional approach to taking down inflation in report to Congress. Now this is a very, very important thing and quite puzzling thing that's been happening, because the gap between a real interest Fed fund rate or interest rate and the inflation rate is huge. Okay, so gap is huge. Now they have to do something very serious if they actually want to control inflation, and Fed don't have the tool to manage the current inflation. They literally don't have it, because this is not going to solve by monetary solutions, because this is a crisis, I mean, which is not at all in the purview of finance or the Fed chairman. This is something else. So until and unless country settles down their whatever they have in between, it's not going to sort out, right? After that, you have all Fed and S&P's price performance, and we have seen how central bank across the globe started moving higher, because they have to also save their currency, and most of the trades are pegged with dollars. So if the dollar started moving high, obviously interest rate is going to move high, and it's not only happening in US but other countries as well. So this is what we have here. It is majorly dominated by the stock market problem, the Fed, and this one is very important, how Ukraine um, is not at all indicating any sort of move which will be a peaceful one. So let us see what will happen. And now let's turn into the market, where we are going to see what has actually happened as far as last Friday is concerned before checking and analyzing the chart. But before that, if you haven't yet subscribed my channel yet, hit on the subscription button, also hit on the notification bell along with the all button to get my updated video notification. Now Friday was I would rather say a flat day, where the Dow Jones closed 38 point lower, Nasdaq closed 150 point higher, and we have a mixed reaction in S&P. Apart from that, the oil has is actually cooled down a bit, trading near $110, and the US 10-year Treasury is actually making new moves. We are going to discuss about this in today's video. VIX has increased significantly higher. Apart from that, the natural gas and other commodities, although they have corrected a bit, but they are also holding their trend. And the dollar index finally closed at 104.65 as far as this week is concerned. So mixed bag of number, or I would say the last day was the day of consolidation, and people don't want to touch Friday. They have whatever have to make, they have made till Thursday, and then probably they have taken the rest. So let's now quickly go to the chart of US Treasury yields, and it is giving, or the yields are giving some very important signals. And it is after, I think, 19, so it's been 42. So the next target for the yield curve, if it continues to sustain above 3%, is going to be somewhere near 5.2%, looking at the kind of situation we have. So the next two targets will be 4% and 5.2%, which means the levels that we are looking here was as similar as or as high as the levels or the interest rate or the yields that we have seen in the year 2007. So it's been a very big move that's been happening. At least the bond market is showing those moves, and it is simply the lender who is going to ask more in case of uncertainties, and the uncertainty right now is extremely high. So if things could move towards 5% in the 10-year yield, it's going to be a big thing that one must take a note of. Okay, so better be worry about this move. Apart from that, we are definitely going to talk about the dollar index, because this is one of those which is actually making big moves, and after the breakout that has happened above 104.15, as we can see that it is sustaining quite comfortably above 104, and if it continues to do so, we will definitely have 105, 106, 107, something like this, or as far as the immediate target is concerned, is going to be 108. So $4 worth of move is definitely possible. Technically it should go towards 120, but I don't want to think about the scenario right now, because 120 is going to push the stock market towards the big lows. So I don't want to look at that scenario. Hopefully things will, or sanity will prevail in the market, And let's now go to the stock indices, where we have seen the utmost pain. And the problem is, the pain is not yet ended. Although if you can see, Nasdaq has already corrected like 33-34%, but looking at the overall chart or looking at the trend, although it is now trading at the 200-day moving average of the weekly chart, this is a big correction that has happened as far as index is concerned. But the thing is, how can you be so sure that the overall correction is now over? Okay, and if you are looking at the range, if you are looking at the range of Nasdaq, you will see something like this. So this is the range for Nasdaq, right? Which is simply saying that if it falls below the 200-day moving average, then we will move towards 8,700 as far as Nasdaq is concerned. And that's why you better be very worry about the move that you can see. So we have some more to go as far as the lower end of the range is concerned, right? So these are the things that you need to look at as far as Nasdaq is concerned. Here we are as far as the Nasdaq chart is concerned. So this is what we have here. Now talking about the upside, it may go towards 20,000 or more, but that is a different story for a completely different time, so this is not the right time to talk about the upper end of the range. We are severely facing to find the bottom. Now I don't want to check the Dow Jones, rather I will check the S&P 500, which will give me a balanced picture. And if you are looking at the weekly chart of S&P 500, you will see something like this. Okay, a very simple and clear chart in front of you. And if you are looking at the weekly chart of S&P 500, what you can see here are two important support. First 3,400, and then your big support at 2,800. So let us see whether it will move towards 2,800. So the possibility for 2,800 is less compared to 3,400, because last time, this extended lows has been made in the year 2009 and then in the year 2020. So hopefully this will not be the case and sanity will prevail at or near 3,400. That's what we are expecting as far as Dow Jones is concerned. So beg your pardon, as far as S&P is concerned. So the thing is very simple, that even if you are looking at the current scenario, there is a possibility of a slight bounce back on the upside. But looking at the current price action, it is very clear that the lower end of the range is still open, and the overall market may move lower in the upcoming sessions as well. So for traders, you need to be very sure about your next move. As far as investors are concerned, you better look at good stocks, good quality stocks, because stock has fallen quite a lot. There are stocks which have fallen like 18, 19, 95, 98%. So this is quite a panic or quite a move that has happened throughout the stocks. But the thing is, if you are getting a quality at a dirt cheap price, obviously the situation will not be good, and that's where your research study, your analysis comes into the play. So let us see how things will work out. Some correction, some more correction are still there. We are not at all out of the woods, but more than 80% correction is over as far as the current market scenarios are concerned. So this is the end of the video. Thanks for watching.